talking about the real truth behind making money in Forex trading or any kind of short-term trading for that matter. Because more often than not, I've seen many people over the years, they come into the Forex markets, feeling like this, right? I'm going to make a killing, I'm going to fire my boss, I'm going to be a millionaire, I'm going to be financially free. And more often than not, they end up like this, busting their account, losing a lot of money. And it's always the same old story, right? They see someone making money trading Forex or trading something else and they think, hey, if he can do it, I can do it. It can't be that difficult, right? Just pressing a button, so simple, right? All I need is, I just need the right strategy, okay? So they go buy a book, they attend a course, and they learn whatever strategy that person uses. For example, some people, they use Fibonacci, some people use Ichimoku cloud, some use Ichi Scratchy, some use trend following, trend reversals, Bollinger Bands, stochastics, all kinds of strategies, divergence. And they jump into the market and they apply the strategy, and what happens? They start losing money and they say, how can this be? I'm using the same strategy as the guy. Why am I losing money? Or they start applying the strategy and they make money for a while, and then eventually they lose everything they made and a whole lot more. And they start to think, hey, this strategy doesn't work. This mentor's teaching me crap. So what do? They find another mentor, right? They take another course, they read another book, and they learn a different strategy that says, hey, my strategy is better than the other strategy. So they learn something else. And they say, okay, this must be it. This is the holy grail. They go into the markets, same thing happens, right? They lose money again, or they make a bid and lose everything else. And they say, okay, now this mentor doesn't work. Let's find another mentor, right? And they go from mentor to mentor, from course to course, from book to book, and they go around in circles for years and years, busting all their accounts, losing all their money. And eventually, some of them come to the realization that no one can make money in Forex. Or, these gurus who are making money, you know what? They're holding something back. There's some secret strategy they're not teaching us. The bastards, right? So what's the truth? What's the reality? The reality is that only a small percentage of people, less than 10%, make money from trading Forex. And majority of people, 90%, even though they may attend the best courses, read the best books, they learn the best strategies, they will always lose money in trading. Why? It's not because the 90% don't have the right indicator or they don't have the right strategy. It's because 90% of people lose money in Forex because of the wrong psychology, the wrong mindset, all right? To be a successful trader, the strategy you use, the indicators, the price action only accounts for 10% of your success. 10%. So you can learn, again, the best strategy from the best traders in the world, but you're still going to lose money because it's only 10%. 30% of your success comes from money management. We call it position sizing, knowing how many lots to trade and keeping your risk consistent and small. 60% or more of your success comes from having the right psychology and being able to manage your emotions. And the majority of people, they don't have the right psychology. Why? Because they come into the Forex trading business with the wrong expectations, with unrealistic expectations. And when it doesn't turn out the way they think it's going to turn out, it messes them up psychologically and emotionally. Unrealistic expectation number one is successful traders make money every day, every week, every month. Wrong. Even the best traders in the world have losing days, have losing weeks, and even losing months. Unrealistic expectation number two is successful traders have some kind of special indicator or technique where they can predict where the Forex price will go in a particular trade. Wrong. See, in reality, no one can predict where the price is going to go, because where the price goes on a trade-by-trade basis is totally random, right? Because prices move because of emotions in the market, and it's impossible to predict the emotions of millions of traders in the world that move the Forex price. I can't even predict my wife's emotions the next day or the next hour, right? So if I can't even predict one woman's emotions the next hour, how do I predict the emotions of millions of people in the world to know where the Forex price is going? It is impossible, right? You can't predict where the price will go. So the reality of the situation is when you use a certain strategy, it gives you a statistical edge in the market. And what that means is that on any trade you take, there's no way to tell, is it going to be a winner or loser? Every time I place a trade, I've got no idea where the trade's going to go. Is it going to win? Is it going to lose? I've got no idea. But I know that if I keep placing trades over a large sample of trades, at least 100 trades, I know I'm going to win more than I lose. Because over a large sample of trades, using a strategy, for example, following the trend or buying at support, selling at resistance, gives me that slight edge in the markets. But that edge only comes over a large sample of trades. Unrealistic expectation number 3 is that winning traders win most of the time. They win 70, 80, 90% of the time, and their money grows in a straight line. Alright, so for example, they start with $5,000, their money grows all the way up in a straight line to infinity and beyond to the promised land. Doesn't happen. Nyeh. What's the reality? The reality is most successful traders, their win rate is somewhere between 50 to 55% on average, right? Even the best traders in the world can only get at the very most a 60% win rate sometimes. I can tell you that most successful traders would sell their grandmother to get a 60% win rate consistently. The reality is that your money is not going to grow in a straight line like that, right? So what you're going to really experience in trading is that when you start, anything could happen, right? It could go up, it could go down. In fact, it could start by going down first, and it goes up, it goes down, goes up, down, and eventually, over a large sample of trades, as long as you stick to the right strategy consistently, your account will grow over time because you've got an edge in the markets. But the edge will only play out over a sample of, say, 100 trades. But in a small number of trades you take, like you take 5 trades or 10 trades or 20 trades, anything could happen. In fact, if you use no strategy and you take 10 trades, you could get 10 winning trades purely from luck. Or if you use the right strategy, you could get 10 losing trades in a row simply because in a small sample size, anything can happen because every trade outcome is completely random, right? No indicator can predict where the market will go from trade to trade. It's only in a large sample that the right strategy gives us a statistical edge in the markets. So for example, in every 100 trades you take, if you can get just a 50% win rate, that would be 50 wins and 50 losses. The most important thing is to ensure that when you lose less, and when you win more. And it all depends on how much you risk per trade. So my suggestion to most people is you risk, about 1% per trade to start off with, right? And we call that your R. So R represents your risk per trade. So if you risk 1% per trade, for example, and you get 50 losses, that's minus 50%, all right? And each time when you win, you have to win a bit more than you lose, all right? So you could target, for example, 2R or 1.5R, and say you target something like just 1.3R, which means every time you win 1.3%. Not being greedy, right? So each time you win, if you win 1.3%, what does it give you, right? Let's work it out. 50 times 1.3, it's about 65%, all right? So the winners minus the losers, you're still getting a 15% return over 100 trades. Okay, so for example, if you do 100 trades over 2 months, that's about 15% in 2 months. 15% in 2 months is about 90% return a year. That's not bad considering that you only have a 50% win rate. With a 50% win rate, you can get 90% return a year, risking only 1% of your money for each trade. Now, if you're more aggressive and you risk 2%, of course you get more volatility, but you could get a higher return. If your win rate could go above 50%, you can also increase your return. So yes, you can make really good money in trading Forex. So if it is so simple, the maths is so simple, why can't everyone do it? because psychologically it is very difficult to go through the journey to get this result. And let me show you my own trading statement to prove why it's not easy. All right, so I'm going to show you my trading statement over the last 100 trades. And again, why 100 trades? Because like I said, you need at least 100 trades for a statistically significant sample size. Anything smaller than that is insignificant. Anything smaller than 100 trades, it's pure luck, right? But 100 trades, you get the true edge of a trading system. All right, so I just printed my trading statement out today. It's the 27th of June. So you can see over here, 27th of June, 2020. And the last trade I took was yesterday on Friday. It was a CAD Yen trade. There you go, on the 27th or on the 26th of June. I took this CAD Yen trade and I closed it before I went to sleep because it's a Friday. I closed it at just a $7 profit. I always close it before the weekend. All right, so these are altogether 101 trades that started from the 6th of May, right? So I roughly take about 2 to 3 trades a day, and so I clock about 100 trades every 2 months. So let's take a look at some of the statistics of 100 trades, so you understand what happens really in real life trading. Do I win all the time? Of course not, right? So despite the strategy I use, which is a trend following strategy, these are some statistics, all right? So you can see over here, this is the equity curve. Started the 100 trades in May at about $36,000 and ending up with $44,000. And so the total net profit is $7,700. Okay, so what's the return? So if you take 7,007 net profit over the initial capital, it is roughly about, let's see, 7,744 divided by 36,000. All right, so that is about a 21% return over 100 trades. All right, now in this particular account, I'm only risking 1% per trade. That's it, 1% per trade. So that's about a 21R return over 100 trades. Now, what's my win rate? Again, it's not 80%, it's not 90%, it's just about 50%. So you can see that in total, my profitable trades, 53.4% were winners, and my losing trades, about 46% were losers. Okay, and you can see my average loss per trade is $326, and my average win per trade is $427. So the most important thing is to make sure when you win, your average win is more than your average loss. So when you win more, you lose less. So even if you're right half the time, you're ending up with a profit. Now, when I ask most people, how many of you won't mind getting a 21% return over 100 trades, risking only 1% per trade? Most people would say, yes, I want that. Teach me how. I'm all for it, right? And you teach them a strategy. For example, follow the trend. These are the entry rules, these are the exit rules. You know what's the trouble? Some people will not have the emotional resilience to go through the journey to get the results from the strategy. Why? Well, a good example is take a look at, again, the equity curve, how your money grows. And again, as you can see, my money did not grow in a straight line from 0 to 100 trades, right? It goes up and down randomly. And it so happened that for this 100 trades, the losers came first and the winners came. See, even though my win rate is, more than 50%, but what happens is you don't get a win, a loss, a win, a loss. Doesn't happen that way, right? Sometimes the wins come in a row where you get, 10 wins in a row. Sometimes you get 10 losers in a row, and you never know which one will come when. And it so happened that in this 100 trades, my losing trades came first before the winning trades, right? It's a random distribution. So can you imagine if you started trading over here, for example, and you took 50 trades following all the rules of the strategy, and after 50 trades, what happened, right? You didn't make money. After 50 trades, you ended up losing money. In fact, you can see the drawdown is about 11%. You lost 11% after 50 trades. What do you think goes through the mind of most people when that happens? That's right, you're going to think, hey, if this continues, I'm going to lose everything. Right? And they say, this strategy doesn't work, it's crap. So some people at that point of time, somewhere here or somewhere there, they will give up. They will stop trading. And the moment they stop trading, what happens? That's right. Once the winning trades come inevitably, they are not there for the winning trades because they gave up. Right? So number one, some people give up. Number two, some people don't give up. And what happens is after those, 50, losing trades, they start to take revenge on the market, right? And what I mean by taking revenge is they start to take low quality trades. They say, I'm going to trade to make the money back. And even though they don't see a valid trade setup, they take it anyways. They say, this looks like it's going up, I'm going to buy. It looks like it's going to go down, I'm going to buy, right? So they revenge trade and it compounds and it blows their account. And some people, after losing, some of their money, they say, okay. I don't want to risk 1%. I'm going to risk, 0.5% or 0.3%. So they cut their risk. And I'm going to show you later that if you do not maintain the same risk per trade, if you cut your risk down, what happens is when the winning trades come, you will not be able to make enough to cover the losing trades. So in the end, you still lose money. And then there are some people, after they lose, they say, I got to make it back. So they get more aggressive and they increase their risk. Instead of risking 1%, they risk 5% or 10%, right? And sure, if the winners come later on, they could make it back. But if the losses still continue before the wins come, they could blow their account before the wins come if they increase their risk too much. What is also very common is for newbie traders is once they get into a losing streak, they have an overwhelming temptation to add in new indicators. They say, okay, I'm going to put in this holy grail indicator to improve the winning rate. So I'm going to put in a Bollinger Bands, an ADX, a divergence, an Ichimoku cloud, right? Or they completely change their strategy, right? They totally change the strategy from trend following, they do trend reversals, for example, right? And what happens is the moment you change the strategy, if you don't stick consistently to the same strategy, the statistics get messed up. Right, so after the losing streak, when the winning streak comes, but you change the strategy, the wins don't come anymore. You may go through another losing streak in the other strategy. So by changing strategies consistently, by adding new indicators, you don't stick to a strategy long enough for it to produce the edge that you need to make money in the markets. So let's take a look at how the wins and losses are distributed over 100 trades. So you can see, like I said, this started on the 6th of May, and the first trade was a profitable trade, right? So for most people, when they get a profitable trade, right, they feel good, I'm right, right? And what happens after that winning trade? You get, 2 losing trades, and they go, they get upset, right? And they go, okay, winning trade again, and you got a string of winning trades, right? And then losing trades, so on and so forth. Now, check this out. Once in a while, you can see you're going to have a losing streak. So over here, I had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 losing trades in a row. So what happened here? What did I do wrong? The answer is nothing. Right? Professional traders know it's part of the game. You're going to get winning and losing streaks. In fact, statistically, here's something that you got to know, right? If your trading strategy has a win rate of 60%, like I said, most top traders in the world will sell their granny for 60% win rate. So even with a 60% win rate, you are going to get, based on probability, 12 winning trades and 12 losing trades in a row. Once in a while, right? And if you have a 50% win rate, expect 16 losses in a row and 16 wins in a row, right? I know there's some people who say, but Adam, I know this guy and he claims to have a 90% win rate in his system. Do you think there are traders out there with a 90% win rate? Yes, they are. In fact, I know someone who teaches a course with a 90% win rate. But you know what's the problem with his strategy? This is his strategy. I won't mention his name, right? But what he does is, for example, he sees the currency going up and he goes long, right? He buys the currency pair and he places the stop loss 100 pips away. That's a big stop loss, right? And the moment the price goes up by 10 pips, he takes profit. All right, so think about it, right? If your profit target is only 10 pips, your stop loss is 100 pips, it's a lot easier to reach the profit target. It's very difficult to hit the stop loss. Sure, if you do this, you will get an 80 to 90% win rate. You know what's the problem? The problem is 10% of the time, when you get a loss, you lose 100 pips. And that one loss will wipe out 10 winning trades. So in the end, you still end up losing money with a 90% win rate. And even with a 90% win rate, you can have 5 losing trades in a row. And if each trade you're losing 100 pips, you're going to blow your account. So when professional traders get, those 10 losing trades in a row, which I just showed you, they don't sweat it. They know it's part of the statistical game and they carry on trading the same strategy consistently because they know it's only a matter of time that the winning streak will come and the account's going to grow, right? But a lot of novice traders, once they get 10 losing trades in a row, guess what they do? That's right, they give up, they freak out. Again, they add new indicators in, they increase their risk, and they mess up the entire strategy. And as you can see, once the win rate comes or the winning streak comes, they are not there to enjoy it. They are not there to receive it. And, their path goes all the way down where they blow their account. In fact, if you take a look at the statistics over here, you can see, for example, that in these 100 trades, I had consecutive 10 losses in a row. But at the same time, if you hang on with the right strategy, you will get 12 wins in a row, right? It evens out in the end. Many of you have watched my earlier video on how do you trade like a casino, right? So here's the same metaphor. To me, trading Forex is kind of like owning a jackpot machine. As you know, jackpots bring in 80% of a casino's revenue. Casinos love their jackpot machines because it's a cash cow, okay? And when people play the jackpot machine, sometimes they win, sometimes they lose, sometimes the jackpot makes a huge payout. But at the end of the day, the jackpot machine will always make money for the casino. Why? Because it's programmed to do it. The jackpot machine is programmed with a statistical edge. So what it means is that for most machines, roughly the jackpot is programmed to take 10% of all the bets that are placed. 10%, which means on average, for every $1 million in bets, people put in $1, $5, to pull the machine. On average, every $1 million that's put in the machine, the jackpot machine will pay out 900 grand. They got to pay it out, but they will keep $100,000. All right, and that's all they need. They just need to keep 10% of every bet that's placed to make money consistently for the casino. All right, so the jackpot owner or the casino always wins because of the house advantage. But at any point of time, a player who plays the jackpot machine could win or could lose, right? And every spin, if you think about it, is a random occurrence, right? If you ever played the jackpot, some people, they go, all right, come on, give me 3 bananas or 3 cherries, right? They act as if they can control the jackpot machine, right? And if you think about it, how hard you pull that arm or how hard you press, right? You can't affect the outcome of the win or the loss, right? So you only have an illusion of control. Same thing in Forex. I'm here to tell you that no matter what strategy you use and you place a trade, you have no control over whether it's a win or loss. It's only an illusion of control. The reality is that a win or loss is completely out of your control. But if you keep playing with the same strategy, like a jackpot having an edge, you will always make money at the end of the day. But think about it, you gotta stick to the same jackpot. If you keep changing jackpots, what happens? You don't stick to the same jackpot enough, all right? You don't get that edge, you don't get that money back, basically, all right? So to summarize this entire lesson, knowing this, how could you become a successful trader? How can you become a consistently profitable trader? It is how you respond to losing streaks again, right? So we are all going to go through losing streaks and winning streaks in our trading journey. Again, what do losing traders do? When they have a losing streak, they start to lose confidence. Oh, something's wrong, right? The markets have changed. The algos are picking up my stop losses, the bastards, right? Or, it's a wrong strategy. So, and they keep thinking, how can I avoid these losses? They act as if they can control the market, right? So what do? Again, they start looking for a new holy grail indicator to add in. Or they avoid taking trades. And they miss the winning trades when they come. Or they reduce their risk per trade, right? Or they overtrade. Or they jump from strategy to strategy. Or they start to take small profits. Instead of waiting for the profit target, they take quick profits. So the small profits can't make up for the past losing trades. Or worse still, they remove their stop loss, right? And they remove the stop loss, and what happens, right? That one bad trade wipes everything out clean, okay? On the other hand, winning traders have absolute confidence in the trading system's positive profit expectancy. Winning traders know that the jackpot will eventually make money for them. They just gotta keep sticking to the same jackpot machine with that winning statistical edge in the markets. And they know that, hey, loss is part of the game. The jackpot knows that for every million, it's gotta pay the players 900 grand, right? It's gonna keep 100 grand. It has to pay out that 900 grand. The jackpot can't keep everything. If not, no one's gonna play the jackpot, right? And so they keep executing valid trade setups consistently. So remember, you can only reap the profitable rewards of a trading strategy's statistical edge by executing your trades as consistently as possible. So that's what I do in my trading program. When I teach people how to trade Forex, how to trade stocks, how to trade options, it's the same thing. I don't just teach you my trading strategies that gives you an edge in the markets, that gives you that winning strategy. But I focus a lot on risk management, position sizing, and most importantly of all, I focus on 60% psychology, because that is what makes the difference. And let me end off with a quote from my favorite boxer, Rocky Balboa. And he said this, that nobody's going to hit as hard as life. No one's going to hit as hard as the markets. But it ain't how hard you hit, it's about how hard you can get hit and keep moving forward. It's how many losing streaks you can take, how much drawdowns you can take, and you keep moving forward, following the same strategy, and that makes you into a winning trader. This is Adam Khoo. May the markets be with you. Hope you enjoyed this video. Do subscribe to this channel for more. So if you want to be the first to get my next video on YouTube, do click the subscribe button right now. If you want to check out my online courses, go on to piranhaprofits.com, where you can enroll in our professional Forex, stock trading, options trading, and value momentum investing courses, where you're going to learn how to trade like a professional and generate an income anywhere in the world. If you would like to come to Singapore to attend my live classes, Wealth Academy, go on to wealthacademyglobal.com. It's Adam Khoo, and may the markets be with you.